Hi, this is Zach Meir with the Bulletin Board of Heroes for Friday, the 10th of March. And we had the warnings there during the week. I suppose the close yesterday below that support line there from back in October, around 7,900, and the close well below that. And then the break of the 50-day moving average today, 78.30, were the signals. And I suppose ahead of that, we even had the RSI uptrend line from October breaking during the day yesterday, and obviously on the day's close as well. So we were fearing that 77.20 could be the support zone for this market, or it might head towards that area, which was the old January support. Below that, we've got the risk of at least 7,600, which was the old December peak. Probably don't want to go much lower than that at this stage, but if it was down to 7,600, I suppose the FTSE would then be oversold, and then we would be looking for some kind of rebound. But the risk of 7,600, especially while we remain below the 50-day moving average around the 78.30 area. On to the DAX, and here obviously the US contagion affecting everyone, all the main markets. Here, got a gap down. That was in contrast to the gap higher that we had at the beginning of the month, so it's an island reversal there for the DAX. We've got an uptrend line there from back in the autumn, back in October. That's so far held, so the low of the day, 15,300, so that's actually quite a strong sign, really. Risk of this market heading down towards 15,100 and basically testing March support at the 50-day line. But ideally, we have seen the worst here, even though that island reversal is a very strong negative signal. You'd normally expect that to take us back towards 14,900, but so far at least we're clinging on to that uptrend line, and so doing rather better than the FTSE. The Dow has been the worst of the three anyway, and with the banking issues in the US and a bit of a tech meltdown, we've seen the feared test of support at the 200-day moving average. That's around the 32,400 level. That was broken. A near 2% drop yesterday, but a falling RSI support line, so there might be a bit of interest for the market to just end the week, so maybe get back towards the 200-day line, 32,400, something like that, a little bit of a rebound. But the failure at the 50-day moving average, the failure at RSI 50, just about a week ago was a clear signal, and the worst scenario has come to pass. We've got the 50-day line now falling as well, and really unless we are above that on an end-of-day close basis, this market looks like a sell into strength. Certainly while we're below the October support line there, around 32,800, then we are basically sell into strength and looking at potentially testing November support there around the 31,700 area over the next few sessions. But at this stage, perhaps 31,700, the lowest that we're looking for, and obviously if we broke that, it would make the post-November price action just look like a rolling top. And you can see that we had that line of resistance from the end of last March, blocking the progress from November to February on this market. Things no better at Bitcoin, and in fact here we had the warning with the Silvergate debacle just a week or so ago. We had an unfilled gap to the downside through the 50-day moving average, which is a strong negative signal. We feared that we would have to test the 200-day moving average at 19,700, and we've nearly done that now. Below that, we've got old resistance from December around the 18,200 area. But the good news, I suppose, if there is any good news, is that we are now oversold. So there's likely to be a little bit of interest around that 200-day line, even though that head and shoulders with a right-hand side gap is a rather bleak signal. We had the indication just a couple of days ago with the break of that uptrend line, that neckline support, that this market was heading lower, but in fact that was also on the cards after the gap down through the 50-day moving average. On to the stocks, and obviously with the market being as it is, not too many highlights to look at. Here we've got Barron Oil, which is actually managing to be up 5% on a rather grim day for the market. Here we bounced off the floor of this rising trend channel, one that's been in place since basically the end of October. The level there around 0.14. Above that, we're looking to break the rising 50-day moving average at 0.18. over the next week or so, but that's probably about the best you can say. If you are a fan of the shares, you'd just be hoping that we'd stay in a range between 0.14 and let's say 0.28 over the next month or so, but that 50-day line rather needs to be recovered. On to Borders and Southern, which I covered a few days ago. Here an interesting, sort of surprisingly bullish setup here, unfilled gap to the upside, very strong hammer candle so far today, unfilled gap to the upside at the beginning of the month as well. So this is probably the best of the stocks you'll see in the Bulletin Board Heroes today, breaking through the falling 200-day moving average, and if we can close basically above at current levels or above them, then we're looking for probably a decent move to the upside. So above the 200-day line at 3.25 pence, looking for as much as 5.5 pence by the end of next month. The overall pattern here is an island bear trap reversal, so gapping down back there in November and gapping up twice over the last few weeks. So that should not disappoint, although obviously in the way the market is, anything can disappoint. While we're above the 50-day line, the idea of recovery is still intact, and that's around the 2.7 pence level, but ideally we don't fill that gap, the second gap higher. Moving on to another stock which is managing to edge higher on a bad day for the market, Firering Strategic. Here we broke a line of resistance basically yesterday, but probably done it today. And just looking for the stock to break neckline resistance around the 8.75 pence area to then get us back to the top of that gap that we had back in November around the 10.75 level. We could see that maybe by the end of next month, given the way that we've been consolidating for so long. But ideally, no new lows there for this market ahead of, and no new break back below that resistance line from November ahead of a move to 10 pence plus over the near term, or potential move. Genedrive has been appearing a lot in recent days here, largely because there aren't that many situations, but also because the chart's been quite interesting. We've had a rebound for the shares to start this month above the 50-day moving average, looking for a 40 pence target, which should be only a week or two away, and that really would give us the confidence that above 40 pence we could then maybe head back to one-year resistance up to the upper 70s, but obviously let's keep our feet on the ground in the meantime. The fact that we had such a zigzag in the recent past does suggest to me that the market's trying to get rid of those weak bulls ahead of a move higher, and hopefully with that volatility, that has already happened now, so they're out of the way, and hence the blue candles over the last few days. A stock which I've never heard of, which is almost impossible given how many shares I look at, is GS Chain. Here we've broken a line of resistance from back in August, but done that earlier this week. I want to see a nice end-of-day close maybe next week above the 50-day moving average at 3.5 pence, and if we can get that, then maybe it's up to 5 pence by the end of next month. Bullish divergence there as well, falling wedge breakout. We've got various triggers there on a technical basis, and upside value while we hold above the 3 pence area on an end-of-day close basis. Moving on to mobile streams, which was in the wars over the course of the autumn, let's say. But the share's trying to put in higher lows over the recent past. We've had bullish divergence. That did help the cause back in December. But now we've got the shares trying to break back above a now rising 50-day moving average. End of day or end of week close above that at 0.12, and we could be looking to the upper teens, so the top of that rising trend channel from November, around 0.18, maybe by the end of next month. If you're cautious, you wait for March resistance at 0.13 to be broken before taking the plunge, if you are so minded. One of the things about today is that the market's so bad that stocks which are up by a decent amount are obviously quite special. One of them is Microsaic, which is just breaking that 2022 resistance line there from back in August. If we can get an end-of-day close above that, around the 0.046 level, then we could be heading higher up towards the 200-day moving average level around 0.05. Obviously, this is not a situation for everyone. Big picture target here up to as high as 0.08 over the next 1 to 2 months. But just the first signs with a higher low there and a break back above the 50-day moving average now rising, that we could have a turnaround at Microsaic. Another stock which has been trying to turn around over the recent past. We had a spike last month, a pretty spectacular one. And the key here for OKYO is that we break back above the 200-day moving average. That's around the 3 pence level. Get a close above that, then we could at least head up towards that top of that triangle there at 5 pence by the end of next month. That triangle there from May last year. So let's see if OKYO could step up to the plate. Wouldn't expect to see now price action below the 2.4 pence swing low that we've had to start this month. On to Prospex, which pulled the rug rather nastily over from under the bulls at the latter part of February. Current situation is that we're trying to regroup. There's an uptrend line there from back in September, which is held. We also found support above the 200-day moving average, which is a positive there. Neckline resistance around the 12 pence level, and looks as though we'll be able to hold above that. We've got a bit of a hammer rebound today and head up to 15 pence maybe over the next couple of weeks. And that would give the whole picture there a better look than we've had of late. You can see that on the way up, 12 to 13 pence was resistance, so hopefully we can get through that. Then it would take us to the mid-teens over the near term, but ideally no fresh lows below 11 pence or near-term lows for Prospex at the moment. Finishing off with stock which I haven't looked at for quite some time, Sabien Technology. Decent update from the company today. We gapped through that resistance line there from November. That might give the shares enough momentum to hit that resistance line there from April last year, as high as 12 or 13 pence, in fact nearly 14 pence in fact there, over the next 4 to 6 weeks. Maybe by the end of next month we could be up at 13 or 14 pence on Sabien. Obviously not looking for any new lows or sustained price action back below that November resistance line. That's it for me today. More updates over the weekend.